We're here on the 5 range Euro Aussie, and this is the head and shoulders that are set up. I will also talk you through the high time frame analysis in just a moment. So here is the trade. I'm looking at completion of an AB equals CD pattern. Let me just go out to the daily time frame and do the high time frame analysis. It doesn't have too much to do with the daily time frame, but it's always good to get an indication of what's actually happening here. So really we're looking at the market coming down to this level. We haven't actually tested these lows as yet. Let's go down to the 240 time frame. So I am expecting the market to come lower here. If we zoom out, and you notice the theme of we had a high, a lower high, a lower high, a lower high. We're looking as though we are going to break out to the downside at some time, and then we've got this low here. We've got an equal measured low and another equal measured low here. So if I just put a structure level on here, you can actually see really that highlighted area there comes down to here. So we are making new lows, but technically we've not had a break below, close below. And you can see that we've had reactions at this level in the past. The last 4 hourly candle was an indecision candle. Let's drop down to the 60-minute time frame. Remove the VS1 levels, and we do have this, a falling channel. Now it's not one that I can trade, but these typically break to the upside and typically break when we come into previous structure. And if I put that structure level just there, you can see that we've come down to the lows. So I am expecting a little pop here to the upside, potentially up to this level. However, on this currency pair, because I'm working the 5 range head and shoulders, I'm going to go for more conservative targets. So here we are on the 15, and you can see right now this is consolidation. So whenever I see this consolidation at structure, I'm either expecting a breakout to the downside or a reversal. Let's have a quick look at the 5 minute. You'll actually be able to see the head and shoulders here. Okay, so really importantly, if I put a structure level on here, this low here, we have not violated it. And what the market did, it had a nice run lower. We put in then the head, so only just making a new low. We pulled back up to here. This gave us an initial structure high. And whenever I look at head and shoulders, I always need the left shoulder to be oversold. This is because as the market runs down and we see a bounce before we come into structure and then lower, this indicates that we went oversold. We saw a rejection. The rejection couldn't hold. It came lower. We did not violate structure, and then we came up to make an initial structure high. So this is just typical of the way that I trade these head and shoulders patterns. So if I just go to the 5 range here, we can actually see the head and shoulders better. So I'm just going for an AB equals CD pattern here. So it's this. Let's just make sure we get this right. It's that move there. And then we duplicate it and put it out here. Bring on the orders. And I was actually late getting involved in this trade. Really, I would have got involved here or here, but by the time I got my entry, it was further up here. So stops just below this rejection candle here. So it does mean in this instance I am risking 14 pips for 17. And we're back. We're now within a few pips of target. So only a few minutes have passed here, to be honest, maybe 10. What I've just done here is we're approaching these targets. I've gone ahead and reduced down the risk on this trade. So the risk now has been reduced to, that's not right, risk has been reduced to 4 pips. I don't like moving past break even when these trades are quite small, because what can happen is the market can just suddenly turn, come down, stop you out by literally 1 pip, and end up turning around then to hit your potential targets. So I don't like doing that too much. As you can see now, we've come 1 pip away here from targets, so I'm just going to go ahead now, move 1 pip below break even. Hopefully we can just spike up here and hit this this trade. This should be hopefully a nice easy win, a nice quick win should I say. Again, we do have the potential here to go a lot higher. The reason I'm not is because that falling channel is not the type of channel that I can trade. Therefore I don't trade it because it either wasn't profitable for me, or it's not one that I noticed with my eyes, and it's typically not one that I've tested because I've not really noticed it. So lovely, there we go. I think it may have been 16 pips, that 16, 17 pips. So there we go. If you haven't subscribed to my channel, please go ahead and do that, and of course if you did like the video, go ahead and give it a like.